Good day traders. From this video we're starting a new series on our channel which is aiming at providing good explanation on different trading related elements. The goal here is to provide you good understanding on those topics in a short and simple form. In the next few minutes we are going to discuss the technical indicator MACD. I'm going to explain to you how it works, what it indicates, and how you can put it in practice in your own trading. My name is Damien, you're watching the Road to El Dorado channel. Let's get started. The first thing you want to do once you're on the chart is to add the MACD. You do this by going to the indicators and then in the search box you type in MACD and you choose the one that says moving average, convergence, divergence. Once you click on it, the indicator will appear on your chart. Once the indicator is on your chart, first you want to make one adjustment. You come to the settings of this indicator and then you go to style and you scroll down to where it says zero line. On the zero line you click the color, you choose something more visible and then you increase the opacity to 100% and you make the line thicker. Once all of this is done, you can click OK. The reason we did this is so that we can make the zero line a bit more visible. Now the MACD is composed out of 4 elements. You have a couple of lines that are moving, you have a histogram, and you have this horizontal zero line. The first of those 2 lines, the blue one, is called the MACD line. The way that the MACD line is calculated is a 12-period exponential moving average minus a 26-period exponential moving average equals the MACD line. The other orange line that we have is known as a signal line and it's simply a 9-period exponential moving average. The histogram indicates the distance between the 2 lines. The bigger it is, the bigger the distance, and the smaller it gets, the smaller the distance. The point at which the histogram switches color from green to red or vice versa is the exact point in which the 2 lines are crossing. The zero line is located at the exact point in which the histogram switches color and it's very important for all of the different indications the MACD can give. The MACD can give 3 primary types of indications: a reversing indication, a continuation indication, and a MACD divergence, which is also a type of a reversing indication but even stronger. The first type of indication is given once we get the so-called MACD cross. Now the MACD cross can happen above the zero line or below it. For a bearish cross, what we need is both of the lines to be above the zero line and you need the MACD line to be above the signal line. Then what we look for is a condition in which the 2 cross and start moving to the downside. We got one right over here. We're going to indicate it with a line. You can notice that since this point the price continued dropping lower. Opposite to that, a bullish version happens when both of the lines are located below the zero line and the MACD line is below the signal line. A signal is given once the MACD line crosses above the signal line. At this stage, this is a bullish reversal and can indicate a potential increase as the one that we can notice happened in this case right over here. You got another bearish one over here which produced a serious drop. Then down over here there was a bullish one producing a minor increase. Then another one over here producing a bigger increase. Then bearish over here producing a minor drop. Another bearish over here producing a big drop, and so on. The second form of indication that the MACD gives is a continuation. A continuation indication is given once both of the lines cross respectively below the zero line or above it. In cases in which both of them cross below the zero line, this indicates a possibility for a further drop, and when both of them cross above the zero line, this indicates a possibility for a further increase. We have a few clear examples on this chart. The first one happened right over here. You can notice that as the 2 lines crossed above the zero line, the price kept on moving to the upside. Then over here we have a bearish example. The price was already moving to the downside, both of the lines crossed below the zero line. This indicated a further possibility of a drop and the price kept on going lower. Another great bullish example right over here. The price was moving in an uptrend. Both of the lines crossed above the zero line, indicating bullish continuation, and we can notice that the price kept on moving to the upside. The last form of indication is again a reversal but stronger than the regular cross, and it's known as the MACD divergence. For this MACD divergence from those two lines part of the indicator, we need only the blue one, the MACD line. For that reason, if you want to simplify things for yourself, you can go to settings and you can remove the signal line so that the MACD line is more visible. The MACD divergence has a bullish version and a bearish version. Let us start with the bearish version. A bearish version happens when the price forms a couple of high points, one after another, which, when connected with a trend line, are ascending, right over here. Now, at the same time, in the equivalent positions, the MACD is forming a couple of high points, but those high points in the MACD are descending. This produces the so-called bearish divergence. One important thing to mention is that for this bearish diversion to be valid, you need the MACD line to form both of its tops above the zero line. This formation suggests that the price can transit from an upswing to a downswing, producing a substantial drop. Over here we have a beautiful example of that. The opposite situation of this would be if the price forms a couple of low points which are descending, but the MACD forms a couple of low points which are ascending. We have such an example right over here. You can notice that over here we had a low point in the price, it went up, and another low right over here. If we connect them with a trend line, you can notice that obviously they are descending. Now in that equivalent time, if we look at the MACD line was located below the zero line. It also formed a couple of low points, but if we go ahead and we connect them with a line, we can notice that they are ascending. This is giving a bullish divergence, which is indicating that the price can transit to an upswing. We can notice that over here, the price produced a beautiful increase. Those three forms of using the MACD can be extremely useful, but do have in mind that on its own, the MACD is not very reliable like any other technical analysis. For technical analysis to work well, you need to combine them and look for situations where they are producing multiple confluences. What this means is that if you're using the MACD and it gives you a specific signal, you want to check for other forms of technical analysis such as supports, resistances, trend lines, market structure, chart patterns, and so on, which would give you further confirmation. I hope that you've enjoyed this video. Please let me know down in the comments whether this video was helpful for you, and also what do you think about it. Additionally, let me know what would you like for the next topic to be. If you've enjoyed this video, you can go ahead and subscribe for our channel. Additionally, you can follow our Instagram and TikTok profiles. I'll see you next time.